And then I go. Okay, we are live on Facebook. 1 second, and let me go do what I have to do. Chris, I'm gonna let you know when you can share it on your page, but we are live on Facebook. You guys let everybody know I got Chris Lee. We're gonna talk about how you could buy before you sell, down payment assisted programs, what you guys are always blowing me up about. Tune in from all over all 50 states. Let's go. And let's see. Okay, here we go. I just got to change my audience to public. And Chris, if you want to go on my page and share it on your page, you can.
I did. I shared it on mine.
No, the live. We're live. So you can actually if you go like to my page right now, if you want, you could just hit the share button and it goes straight to your page too.
Okay, let me do that.
Okay.
I have to grab my phone. Hold on.
All right, you guys. Y'all got some time. Come on. We got Chris Lee, New American Funding. All right. Down payment assisted programs. And if you already own a home, we're going to talk to you about how you can actually buy before you sell. So this is going to be some good stuff. Come on, you guys. Tune in. And let me see if I can highlight this. Let me see if it's going to let me highlight it. Actually, my hairdresser taught me about this highlight. I didn't even know anything about it. All right. I think I did it. All right, you guys. All right, so it's Tuesday. On Tuesdays, you guys know that I talk about real estate. And let me just make sure. All right, you guys. Okay, on Tuesdays, you guys. All right, we got Lonell and Keisha watching. Welcome. All right. So on Tuesdays, we talk about real estate, okay? Whatever, if you guys have some topics that you guys would like me to talk about, please, DM me. If you put it in the chat, it might get lost, but you could go ahead and try to put it in the chat. But if you DM me, let me know what you guys want to hear, more about, please do. So far, we had home inspections. We talked about, I've had homeowners, homeowners insurance and everything, 1031 exchange. You guys go to Sessions with Alita on YouTube and you guys can find all those videos and stuff right there on Sessions with Alita on YouTube. But today, we're going to talk about don't be scared, right, Chris? Don't be scared.
Absolutely.
Don't be scared of these rates.
Don't be scared.
Because when I first started 23 years ago, they were 9%. The rates were 9. Now, I know what y'all saying. You guys are saying, well, things were cheaper. Yeah, they were cheaper, but the rates were still high. And eggs was cheaper too back then. And look at y'all still buying them eggs. How many eggs y'all buy for the Easter? That's what I want to know. Once y'all put that in the chat, okay?
Income was a lot lower back then too.
Oh yeah, income was a lot lower.
Income was a lot lower back then. Make a lot more money now than we did 25 years ago.
See, that's a good point. That's a good point, you guys, man. So I have Mr. Chris Lee. Me has been rocking together since he was with another company and then another company. I kind of like stalk him and kind of follow him, I think he actually stalks me,
Absolutely.
We have to stalk each other, right? So Chris, he's a sales manager at New American Funding. He did wonders for my client. She was looking, she wanted to sell a house, but didn't want to be homeless and stuff. So, he put together the package where she was able to go pick out the house and everything. And, the program lets her pick out the house and then move in, and then we got to sell her house, right? And no, she did not have to pay rent and a mortgage at the same time, but we're going to go over all that, okay? So, Chris, tell people, where are you from?
Where am I from?
Mm-hmm.
I'm born in Los Angeles, California.
LA,
I'm a
LA.
LA. I'm a LA boy, and I love my LA. I love my family down there. But I was raised Sacramento. Been up here since 19. I'm gonna age myself. 1978. Been in Sacramento. So this is home. This is home for me.
Oh, wow.
Yeah,
Okay.
yeah.
And how long you been in the mortgage business?
Uh, 13, 13 years now.
Did you start off as a real estate agent like some people do and go into mortgage?
I spent the early part of my 20s and into my early part of my 30s. I was a medical sales device guy.
Oh,
I was in pharmaceutical sales and medical sales device, learning how to sell. Helped me a lot throughout my years now. I can tell you that. Learn a lot doing that stuff.
and pharmaceuticals changed too. Y'all know what they call the pharmaceutical now. Okay, we're gonna keep this clean. So, what made you get into, mortgage? What piqued your interest?
Um, one thing I liked about doing pharmaceuticals was even though I wasn't a doctor, felt like I was helping to educate and help people. And I was having a conversation one night with a friend of mine who actually owns a mortgage company,
Hmm.
and he literally just looked at me and said, "Hey, you
Keep
should
talking,
come
I'm
work for me."
hot. Uh-huh.
He said, "You should come work for me." And I didn't know what he was talking about. I go, "Yeah, sure." I had a mortgage or two in my life, and we got to talking, and I went to work for him, and it was a great experience, and I've never looked back because there's nothing more refreshing than helping somebody get into their first home, or it could be their second or third home, but that first time home buyer, that feeling when you see a family go into a room for the first time, and the kids just saying, "Mom, this is my room," like my room, like you can't get past that. This is awesome.
Right. I always tell people that you can skip all the math questions on the real estate test and still pass. I hate math, right? And back in the days before we had to do the NMLS and everything, I think I did maybe 2 loans or something, but it was just like for family members and stuff. But I just was like, I don't like numbers. I don't like numbers and stuff. And it was crazy back in the days. You remember when we had Countrywide and all them. You be ready to submit a file, and here comes a rep for one of those companies say, "Oh, no, I got a better rate for you," and blah blah blah. You know what I mean? So times has really, really have changed and stuff. But now you're with New American Funding. And once you let people know, some products and stuff, you can share your screen and do whatever you want. Just kind of let
Yeah,
people know.
New American Funding. Look, we're a lender in all 50 states. I can do a loan in all 50 states for you. Patty and Rick Aviello are owners. They're a married couple. They're the only owners of our company. There's no hedge funds. They haven't taken any money from anybody, and they're really just trying to do things right for the world and our country. Patty we're the largest mortgage bank founded by a Latina, Patty Aviello. She
Mhm.
is a mover and shaker as a woman, Latina business owner in the country, and she does a ton of stuff to help all different communities. And it's an amazing company to work for. One of the programs that is awesome, you alluded to it. What we did for our mutual clients, been about what's it been about 2 months now, something like that.
Oh, yeah.
It's called NAF Cash, right? And I'm just gonna share my screen real quick. Um, did that pop up? Yeah,
Not yet.
not yet.
Mm-mm. Okay, it's popping up now. There we go.
There we go. You see it?
Mhm.
All right, it's there. You can see it.
You can't see it?
No, I can't. But as long as you can see it, I'm fine with that.
Oh, yeah. Yeah, I
Okay.
can see it.
So Navcash, we formed this in 2021. The mission, as you can see here, the story was help borrowers gain a competitive edge in a cash buyer's market, right? So Navcash is an affiliate of New American Funding. It is its own separate entity, but it is an affiliate of New American Funding. and we can do it in all 50 states. This video I pop in here, it's a quick one, and it's hopefully it embeds and works. This is Rick, our co-founder, and he's talking about it a little bit, and so it takes about 40 seconds here. Let me just play this.
1 second, let me, I think we gotta do the sound thing, right? So they can hear it.
They might be able to just pick it up. If they don't hear it, they might pick it up through my microphone.
I don't hear nothing.
Oh, I'm not playing it. Here we go. Here we
Oh,
go.
that's why I don't hear nothing.
Can't hear it.
No, sketchy.
I'll tell you. What's a quick video? So what he's talking about basically is about how many of the percent of the market, which is about 27%. We have an interactive map. I double checked like Sac County and Placer County going into that, and it's about 27, 26, 28% cash buyer in the market, at least through 2024. That's not, up to date 2025. And so this is the reason why we came up with, can you still see my screen? I didn't lose it through all that, right?
Yes, we can still see it.
Perfect. So this is why we came out with NAF Cash. It's really to help the buyer who's contingent and they're getting frustrated. Like how many times do you hear, I'm just done, we're losing offer after offer, I'm tired of being contingent, or I'm not even going to I'm not even going to do it because I don't even want to be contingent. What are we going to do in the meantime when our house hasn't sold yet and we're trying to, when we do sell it, then we got to go here and then we're renting in between and all those different things that people have issues with around contingent. This helps fix that issue. It's no different. It's not like it's a new loan product. Whatever you would have qualified for as a regular loan product, that's what you qualify for. Conventional, VA. We can't do FHA with this. And the reason is because of the flip rule with FHA, right? So it's the one program we can't do because it'll end up technically being a flip because we're going to buy the house for them and then sell it to them, right? So it would technically be a flip. But conventional VA, we can do that all day long. We pre-approve, fully underwritten, get all that going. We send it over to an NAF Cash part of the house. They grab a few things from around the sale of their house, like a CMA from the realtor, a net sheet from the realtor, just to understand the equity in the house to make sure this transaction is going to go well after the sale of the house. There's enough equity in there to do that.
Okay, can I say something? So you guys, so basically what happens is we have clients as realtors, we have clients that come to us and loan officers, they own a house, but they want to buy another one, but they don't want to put their house on the market just in case they can't find another one. So with this program, like you said, what they do, they the client, they get approved. The client, you will get approved. So whatever you are qualified for, then we go out and we go house shopping. You don't have to put your house on the market yet. We will go house shopping for the approval amount that Chris, approves you for. So that's the first step. So when you guys find the house, then the investor gets it in their name. Right, Chris?
That's correct. We submit a cash offer. You as a real estate agent, Alita had to do this. You have to get NAF Cash certified. It takes about 40 minutes or so on an online course, just so you can make sure you do the offer right, because the offer is getting written in NAF Cash LLC name. And at the same time, a separate escrow is open. So the escrow is open to buy the house cash, whatever terms that's in. And then we have another escrow that's opened where NAF Cash is the seller back to you, the borrower. Parallel transactions going on. That offer gets accepted, we close. Even if your house is not sold yet, you move in, you get the keys the day that it's closed. We don't want anything to do with owning the real estate. You get to move in, boom. And what's great about it is it helps with all the numbers that say, you get more for your list price when the house is staged correctly. So if you think about this, you've now moved out of your house, moved into your dream home. You're already working and doing all that stuff while your listing agent still gets to stage the house now and even may get you more money possibly than you would have gotten if you had to sell the house while you were still living in it and trying to get in and out, and dogs, toys, and all that stuff's everywhere, right? So those numbers that you know about that are good. And then there's the buyback, right? So the buyback is just a regular selling transaction. For you as realtors, you're paid on the first transaction. There's no waiting for the buyback. The cash transaction happens. All the realtors and everybody are taken care of. So you're not waiting on anything. And then the buyback transaction is really just us selling the house to the borrower on already a predetermined price. When I say that is because there is, where's that slide? There is a little bit of an addition to the cash price, right? So, like in this offer right here, if it was a $300,000 cash offer, they're using Colorado, but in California, the service fee is 2.05%. That gets added on to the price that we sell back. Why do we do that? We're not trying to make money, but in the first transaction, NAVCAST accrued a lot of payments, right? A lot of things like escrow fees, title fees, appraisals, and the buyer had nothing to do with all that. We took all that on, and it costs a little bit to obviously run the program because we have people that are hired in the program. So in each state, there's a service fee that is added on to that transaction. So it does increase the purchase price a little bit. So a lot of people say this is where some people get stuck with it. Go, oh, I don't want to pay that extra price. I can totally understand that. But when you look at number one, you potentially got more money out of your sale because you were able to stage the house. A lot of people during this time choose bridge loans. Bridge loans are much more expensive than that service fee, much more expensive. So you're saving that way, and you're able. Sometimes you're able to just say, you know what, I wouldn't be able to do this contingent. So if I want to move on this home, then I'm gonna have to pay this little extra service fee. But here's the caveat: a lot of times, and you know this, Alita, when you go into a cash transaction, you get to negotiate that listing price down maybe a little bit as well. So when you bought the house for cash, you might have bought it for less than what you would have purchased it if you were just a contingent buyer. So there's a lot of things to think about when you go, oh, I don't like that service fee. You still sometimes, and a lot of times, come out ahead with the service fee because of maybe getting the house better with a cash transaction and maybe getting a little bit more for your list price because you're able to stage it.
Okay, so going back, so I just any realtors that's watching right now, just think, okay, so you have a client, all right, they get approved with Chris, you go out and find them a home, right? So you get paid, you're getting paid on that transaction, right? Then you sell their home, okay, because they have to sell their home, you get paid on that transaction. The third one, you do not get paid on. No need to complain. You done got paid twice on the same client, right? So don't complain about it. You done made a happy client and everything. You got them into a home, whether they're upsizing or downsizing, you know, you have a happy client and you got paid off for 2 transactions, okay? So I just wanted to really, really put that out there. Now, Chris, how much should they have to like put down? Because I remember my client, in order to do this, she had to put some money into escrow, right? So what is there like a certain percentage or something they have to already have?
Yes. So part of the qualification process is you can see in this chart here the minimum EMD requirement. So if it's a conventional loan, then any 5% is required for any home between 150,000 and a million. You have to put 5% in EMD down. From $1,001 up to 2 million, because we cap it out at 2 million when we do this. 2 million purchase price, you have to put 10% in. Now, I will say this. I don't want to say it's negotiable, but there are ways to ask for an exception. If someone's a really, really strong buyer, like I have someone right now, really, really strong buyer that doesn't have the full 5%, they're going to have a ton of cash when their house sells, but they had more around 3.5%. I was able to get the program to work with them and say, fine, use your 3.5% down. But by rule, it's 5% for most transactions, 150,000 to $1 million into that second escrow.
Okay. Okay. So you guys already have to have these funds. Okay. If you guys are gonna do this program, you guys already have to have these funds. Plus, you guys got to pay for inspections. Okay. Now, NavCash does not pay for your home inspection and your pest inspection, all right? And I'm not sure, do they pay for the appraisal or not?
No.
No,
We
okay,
do,
yeah.
we do an appraisal valuation in the first transaction. But for it to be a legitimate loan package, a real appraisal has to be done in the second transaction, and that's on the borrower.
Okay, so you could, yeah, so you gotta have inspection money, you gotta have appraisal money, and you gotta have at least 3 to 5% to put, put down, and that's of your approval amount, okay? Now, isn't there, what about the title fees? And is there any title fees, lender fees, or anything? Because I know it's like 3.5, but then there's other fees, right? When it comes to
It's
closing.
like a regular loan.
Okay, that's what I thought.
Just like a regular loan. In the first transaction, we take care of it all. NavCash pays all those title fees, all those lender fees, all those transfer tax fees. That's for the reason for the service fee is recouping the money that we kind of put up in the first transaction. But the second transaction, it's just like a regular loan. You're going to have the same title fees, and then they pay their part, and their buyer's part of those titles fees. Yes.
So see that, so then when you look at it that way, the service fee isn't bad because you guys already, like you said, already paid, you know. Okay. Well, that's good. That's good. All right. So what else does New American Funding have for people who are trying to buy, but they don't own a home already? They're first time home buyers.
Let me get, can I finish one thing off on
Oh, I'm
NavCash?
sorry.
That's okay. Because you touched on it, and I wanted to draw it to a conclusion. So there's two really good ways if you're a real estate agent and you're like, how do I do this? Well, when do I use this? Well, obviously we talk a lot about contingent buyers, contingent buyer, contingent buyer, contingent buyer. That's what it was built for. So obviously that would be in your head as a buyer's agent, contingent buyer. It doesn't have to be someone that owns a home though. Let's just say that you're like, I'm in a super competitive market. I'm in the Bay Area, whatever it may be, and I need to go cash to start winning something. But your client doesn't have that kind of cash. They're not competing with it. We can use this program to go to approve them, go buy cash with no contingent, with no home to sell. The service fees and everything still apply. All that stuff still applies. So it's just another way to also go. We might be able to we might need to be more competitive in this market, and I have a feather in my cap. Let me go to my lender and bring him in, and let's get you pre-approved. Now, when we go out shopping every weekend, we're just a cash buyer, right? So that's another way for buyers agents to think about it. And for some of you that are listing agents, we have a way that we can white label this and make it Alita's cash program, and you can put it in your listing package. And the way a lot of agents are using it in their listing package is when you go for your listing appointment, you're trying to get that listing, and you can feel that the seller is a little bit tentative. They're like, I really don't want to do this. Like, we don't want to be contingent, and we don't want to do this. I'm not going to list the house. We don't want to rent in between. We're gonna have to sell the house and then rent and then move again. We're not gonna do it. You guys probably hear that a fair amount of times in a listing appointment. We can white label it, and it's this program, and you go, I got a solution for that. Let me call my lender, and we'll get them qualified for NavCash. You could be in the house getting a listing appointment and turn into their buyer's agent in the same transaction and be out shopping with them that weekend because you got them pre-approved for NavCash.
You guys hear this? I know y'all hear this. Now
So,
let's go back to, you said so they don't have to be a homeowner. So in a market, right now the market's pretty, it's okay, but there's gonna be, if it's a hot house, right? It's nice to have that option, right?
right.
So
Yeah.
you're saying for first-time home buyers, we can market them as a cash buyer.
You can market them as a cash buyer, as long as we get them approved. Now, a lot of first time home buyers are FHA buyers. So that would be a sticking point for anybody that needs to be FHA. But if we can get them approved conventional, or they're a veteran and they can still take advantage of it even if they don't have a home to sell, and essentially get all the benefits of being a cash buyer. Close faster, make a more aggressive offer, maybe get the house for a little bit less than it's listed for, all that stuff.
Okay, so FHA, what does the, I mean, non-FHA, what does the score need to be like for something like this?
The minimum score for this program is 620 for both programs.
But you cannot get down payment assistance on this.
No, we could do that. You could do a conventional down payment assistance loan.
As a cash buyer?
Yeah, because we got to remember, we're just we're just getting them approved to buy the home back from NAF cash. As long as that loan is conventional or VA, we could do that. So the trick would be for someone who's down payment assistance. It's plausible, but the trick would be is your down payment assistance, but you still have to come up with that EMD, right? So that for first time home buyers that are really tight on cash, they might not be able to do it. But if they could get close, if they had the 3%, or if they had something, we might be able to work for them and get it approved on a one-time basis. But that would be the one thing, if you think about it, like a lot of first-time home buyers are not coming with the ability to put that EMD down. But there are a lot that make a lot of money and put money away for whatever reason. It's the first time they're buying a house. So it's good to know.
So you still need all the requirements, you guys, all right? Just don't think because, okay, oh, I could be marked as a cash buyer. You still got to have the job history. You still got to have the W-2s. You still got to get told. You got to get approved first and everything. So you still need to submit all your documents and everything. So, all right, this is good stuff, Chris.
Absolutely. What else you want to talk about?
Let them know about.
Oh, let me just put. Can I just throw this slide up here for anyone that's looking? If you want to get signed up for the realtor certification, scan that QR code and it'll take you right to the calendar. You could choose any of the times, any day of the week. We have a ton of them. Pick what works for you, and you can get signed up for the realtor certification. It wasn't that bad when you went through it, was it, Alita?
No, it wasn't bad at all. It's for realtors, y'all. If you're not a realtor, do not scan, please.
Yeah, don't scan.
So, so people, we get a lot of people who don't have money. They're hearing about these first-time home buyers. Let me say this one thing. There is no such thing as no money down. I don't care how many times y'all see that. No, you got to put money down because you got to do an earnest money deposit. You got to pay for inspections and everything. And you got to have at least most of the time, the 3.5%, 3% or something. So there's no such thing. I really hate when, I'm gonna be honest with you, Chris, you know how I am. I hate when lenders and people post that because we get buyers, they be like, well, I was told no money down. Even if you're a VA, you have to put money down for the earnest money deposit. You have to pay for inspections. You have to pay for appraisal. So yes, so that's why you have to schedule a consultation with me, all right? So I could go over everything and let you guys know. But there's down payment assistance programs that Chris is going to talk about, and then he's also going to throw in about how us as realtors, to help with those closing costs, we could ask the seller to help to contribute towards a closing.
Yeah, Lady bring up a very good point. To be honest with you, there are a lot of things in our industry that we need to be better about. When I say we, I'm really talking about mortgage. Need to be better about in educating the buyer, right? This isn't like someone who knows their favorite restaurant and they go out to eat to the same restaurant. Like buying a house doesn't come around every single day of the week. And we need to educate them better. And you bring up a very good point. People hear zero down and they think I'm going to get into the house with zero money out of pocket. The best way to think about it is there's an overarching term called what's my cash to close? What's my cash to close this loan? And for the most part, there's like 3 buckets of it. There's your down payment, which is what down payment I need for the loan program. And there's programs like USDA and VA that are zero down payment for the loan. But then your next bucket is what are my closing costs? Wrapped up in those closing costs are appraisal, title fees, the inspections. Those are all in your closing costs. And then for people who aren't putting 20% down, you have the funding of your impound account, which is the little savings account that sits there that pays your taxes and insurance for you twice a year when they're due. So you're 100% right. That is a bad picture when everyone sees zero down. They're like, I don't have any money, so I'm just gonna go buy a house. You're gonna always have to put some money down. Now there are those transactions. I think Alita, you and I might have had one where I'm leading into your seller credit thing, where someone may put down, $2,000 earnest money deposit, something like that, and they got down payment assistance, so they didn't come out of pocket for the down payment, and maybe they got an appraisal waiver, and then their cash to close would have been something around, say, $8,000, and then you, as a great realtor, negotiate a $9,000 seller credit. Now all of a sudden, they did get into the house with no money down. They're probably going to get their earnest money back refunded to them. But that was only because as we got down the course of that particular transaction, there was a reason and a good relationship with you and the other agent and the seller. And for whatever reason, there was a seller credit, which, to describe what that is, seller credit is when the seller credits the buyer funds credited to something. You find something in an inspection after you're in contract and you got to fix it. And they're like, well, we're not going to fix it, but we'll credit you $8,000 for it. So essentially, the seller is leaving $8,000 of what their proceeds would have been in escrow that go towards the buyer's closing costs.
So let me chime in. You guys, if you don't use me as a realtor, you're not using Chris as a loan officer. Whoever you use, make sure if you are negotiating repairs, right, and the seller is giving you a credit, make sure that it says seller is crediting $8,000 towards the buyer's recurring and non-recurring closing costs. Do not put for repairs. You know why? Because the underwriter is going to want to see the whole damn home inspection report now. You done opened up a whole can of worms, right? So make sure any credit back, it says towards the buyer's recurring and non-recurring closing costs. Never put it's for repairs. All right. I just had to throw that.
That's an amazing tidbit, because a lot of people get caught on that. There's something else that you want to make sure of. Different loan programs have different caps of how much seller credit can a seller give. So make sure anyone listening, whether you're a realtor or you're someone buying a house, as you're getting a seller credit, make sure you get with your lender to say, I'm getting ready to negotiate this $12,000 seller credit, because the last thing you want to hear your lender say is, that's great, but we only can use $8,500 of it. Because there's a few things that it can't go towards down payment, right? And it can't be above a certain percentage of the certain percentage, depending on what program you're in. VA is different from FHA. FHA is different from conventional. Conventional depends on how much money you put down, how much seller credit you can get. So I think what Alita's overarching thing is make sure you're with a lending and realtor team that work together and in constant communication, so you don't get burned on little things like that by having to leave thousands of dollars on the table because someone didn't know what they were doing.
Right, exactly. Now with the VA though, most it just depends what loan company you go through, right? Some of them, they want to see the PEST report. They want to see Section 1 and Section 2 cleared. Section 1 is evidence right now. Section 2 is stuff that keep an eye out for. But then they also have that one sheet of paper most lenders are using now and everything. So Chris, do you want to touch on the VA and everything?
Yes. And I'm going to show my age because I cannot for the life of me think of the name of the form while I'm sitting here on my dining room table tonight. So I'm going to apologize for that, but I will get it out. But there is a form. I can't believe I used it hundreds of times, but there's a form that we can get past that, right? And get it signed off. The key to this form, the key to this, again, is working with an experienced team that knows an inspection company that knows how to use this form and how to fill this form out so we can get past that part of the process. There are a lot of inspection companies that won't do it.
Yeah.
They won't do it. Like, I'll give a shout out to Finley up there in
I
Roseville.
was about to say
No,
Finley.
I'll give a shout out to Finley in Roseville. They know how to do it.
Mhm.
So it's definitely never one of those things. And make sure you know who your realtor and your lender are.
Yeah, most definitely. And what else comes up? You know, always, very important, never skip home inspections, never skip pest inspections, I just gonna give a story real quick. You gotta make sure your realtor knows the inspection companies, okay? Um, because I had one in a client, right? And there was an inspection company. I didn't know this lending company even had an inspection company, right, Chris? So, and I never trusted them as even being lenders. So I was like, okay. So I was like, you know what? You might want to go with one of my inspectors, right? So my inspectors came, they went up to the attic, they came down, they said, what was the fire from? The inspection report on that counter from the one that the seller had got, that it didn't say nothing about no fire up there. So make sure you trust your realtor, about, lenders, inspection companies, and you know, let me make sure you guys understand. When we say pests, that don't mean no rodents and stuff. That means dry rot. That means they're checking for leaks, all, different types of stuff. They're not checking for rodents. Believe it or not, they're not even checking for rodents. They'll let you know they see some droppings, but that's not even what they're checking for. They checking for structural damage and stuff. So now can you layer down payment assistance programs? Because now California Association of Realtors, they have some programs, and I heard that you could layer it with some of lender programs. Is that true?
Very true. So there are a ton of different type of grant programs, some all the way down to the county. Um, and it obviously it's physically impossible for me to know every county program in California. But what like when I'm able to go price alone, if I know where they're looking, secret sauces. A lot of people don't get detailed enough, and I put in certain an act. Because a lot of people go, "Oh, you're out looking at Sacramento." I'll just put in the Sacramento zip code. But let's just say Citrus Heights has a specific plan, and I put the Citrus Heights zip code in. Sometimes I'll get uh, um, be able to search and look at grant programs, right, or what they might have there. I will say this: for the most part, most of the grant programs that are out there um, don't are not as good or don't lend as much because they have caps and certain things of that nature as just straight traditional Calhafa, right? And Calhafa has its own layering.
Mm.
And Calhafa rates, anyone can go on and look every single morning. They're updated during the week. There's no rate shopping with Calhafa. There's really no rate shopping with almost any down payment assistance place. It's like they post their rates and that's what it is, regardless who the lender is. But you can layer with Calhafa. It just means your interest rate sometimes gets higher, right? So lots of times it's just the 1% my proceeds, not 1%, 3%, 3.5%, depending on the program, and they cover the down payment assistance.
Mm.
Then all of a sudden we have a client's like, well, it's great. You help me with down payment assistance, but I don't even have, going back to that cash to close umbrella I was talking about, I don't even have the $7,000 for closing costs. Okay. So we can layer in another 2%, potentially 3%, what they call a zip that helps with closing costs. So all of a sudden you can get up to somewhere between 5.5% of assistance. But the more you layer, the more that interest rate's going to be.
So the more you qualify for less.
Yes. So if we're already pitching pennies on DTI with just the first one, it's going to be tough to go to that zip level. But if you're not, and we want to go to that zip level, that's great. You just have to know that the more you borrow or the more you get in grants, they have to pay for it somehow. The more the interest rates are going to go up in those bond programs.
And that brings up a good point, you guys. So many times, I know Chris has been through this too. I get calls. Oh, I have the best credit score. I got a 700 and everything, right? Okay, so how much income do you bring in? Oh, about 3,000 a month. Okay, how much is your car payment? Oh, about 700. All right, so you only approved for like 150,000. But my credit score is 700. You touch on that, Chris.
Yeah, great point. So another three layer of buckets. What are the three main things? I mean, there's a lot of things, but what are the three things like a lender looks at? Well, we got to look at your FICO credit score. We got to look at your income. We got to look at your cash, right? The income and the FICO credit score are the most important, right? Because the FICO credit score is going to tell us what programs we can put you in, because our programs are all layered by FICO score, and the income is going to help us understand your debt to income ratio. The cash, I'm not saying it's not important. Saving money for a down payment and closing costs is important, but at least with the cash, we have programs that we can go to help with the down payment. We don't have programs that just go, let me help you with that credit score. We have to take time and stop and fix and help the credit score, right? Which we're more than happy to do. We do it all the time, but it's not like a program. It's like, we got to take some time on this, pay some debts down, do certain things, maybe open a credit card, certain things to get your FICO score up. So I would say an easy way for people to understand how much, just call it 50% on DTI. Some programs are different. Sometimes VA can go really high, but this is call it 50% to make it easy math. If I make $10,000 in a month, all of my debts, that means car, student loans, and my upcoming mortgage payment, pretty much anything that's on your credit report can't be over $5,000 a month. All of them. So if you just went out and bought a Tesla for $1,200 and you only make $9,000, you just took a lot of money out of your debt to income ratio. So that's my last point on this. If you're thinking about buying a house, get pre-approved and get that done before you go out and buy your brand new car or your new boat or whatever it is. Get the house done first. There's nothing worse than a brand new car that on a credit report eating up your DTI, and there's nothing we can do about it.
Speaking of that, you get that after we give you the keys to the house. Okay.
Yeah.
You don't go shopping for furniture. You don't go shopping for cars. You're like, oh, I found a house. I'm an escrow, blah, blah, blah. You know, inspections came out good. I'm going to go buy my furniture. No, you do not breathe during the whole transaction, okay? Until I or whoever your realtor is give you the keys to the house. Do not charge nothing. Do not co-sign. Do not do none of that. Now, speaking of that, Chris, now, you know, some buyers will say, Chris, my boyfriend's giving me $15,000 as a gift to buy a house.
That's fine. For most programs, there are some programs that might have to be an actual family member, but boyfriend and in-laws, it's close, you know, work that out. That's called a gift, right? And here's the easiest way to do that. I think that's great. A lot of great family members. Lots of times it's a husband or a wife, a spouse can do it if they're not going on the loan, right? You just don't take the money beforehand. The best way to do a gift is get it secured, talk to your uncle or whoever, a brother, an aunt, you know, whoever it may be, and say, they're going to gift me $15,000. Get it secured and say, okay, cool. Save that money for me. During the transaction, we will have you sign a gift letter that we need for our paperwork, and the title company will give the correct and accurate wiring information and wire it directly to escrow. That's the cleanest way. As soon as you touch the money personally, now a lot more bank statements come involved, because we have to track every penny to make sure, like, well, they gave it to me this way, they gave it to me that way. And then we have to go, what bank account did you put it in? And some people go, well, I put 10,000 of it in my checking and 5,000 in my savings. Now we got to go grab all these bank statements and verify, track that money everywhere. with the exception of just wire to escrow. The borrower never touches it. It goes right from gifter right to title.
Be easy. Last question. You know what I'm gonna ask? Everybody wants to know, is the rates gonna go down? When is the rates gonna go?
Oh, I'll give you the old school one that everyone says, if I had a crystal ball to tell you that, I wouldn't be sitting here right now. But look, there's a lot going on. There's a lot going on in the world right now. Markets are up and down. I wish I could tell you if they're going to come down. They've been falling, and then something will happen, and then we'll have the greatest increase in a year, right? All in the same week sometimes. So I would say this for people that are sitting on the sideline. Interest rates right now, and this all depends on down payment and what your FICO score is, but you can legitimately think, well, my interest rate is going to be somewhere between mid sixes to mid sevens, all depending on how good or bad your credit is, how much money you're putting down, all of that. Alita said this to start the show. My first interest rate was 8.25%. It was higher than almost any rate that's out there right now. So I don't like the term marry the house, date the rate, date the rate that they talk about. But here's the meaning behind that. If you don't own a house right now, you're paying 100% rent, 100% insurance, 100% interest in your rent. It's not going to anything except someone else's mortgage. You are paying a mortgage, you're just paying someone else's mortgage. So if you're renting, your interest rate, whatever you get, if you love that home and you can afford that payment at that time, is better financially than your rent. That is just one of those things to always understand, because you can always refinance when rates get better. And then when you do refinance, I can't control the market, but for the most part in California, real estate typically goes up. So if you sat on the sidelines for a year, next time I'm going to put, I have a presentation, a quick slide that would show this really well. Let me see if I can say it in words. Sometimes you could sit on the market and say, nope, I'm not going to buy that $400,000 house right now because interest rates are 7.5%. But wait a year, and that house that was $400,000 is now $500,000, but the interest rate is now 6.5%, and your payment is still more because you paid $100,000 more for the house, and you weren't in the house riding that wave up on that $100,000 of equity. I hope that comes out well of my mouth. I have a great chart that shows it to you. Next time I'll be more prepared for that. But it's really, really important to understand that the interest rate is important because it is a driver of how much money you're going to pay and what you can afford. But if you're trying to get into the home buying game and the home ownership game, you got to love the house, fall in love with the house, and we can deal with better interest rates multiple times as they get better throughout the life of that home.
And I always say that if you're waiting, everybody else is waiting too. So so if you wait until the rates drop super, super low, like Chris said, you're going to get approved. And then me and you going to be out there, you're going to get beat out of all these, offers. You're going to be putting like 10, 20 offers on a home. And then I'm going to be saying, well, the listing agent said they got one 10,000 over, the one got, because sometimes they do tell us and everything. So what I agree with Chris, I always tell people, go ahead. If you can afford it, go ahead and get your house now. And then, you be sitting in your house, when the rates drop and stuff, you could just hit Chris up, refinance, right? While everybody else and their cousins and grandpas, everybody is out there fighting overbidding. Like he said, you're going to be overpaying. That's what happened. Because that's what happened when the rates dropped last time. And then it was on the news that people paid too much for houses, right? Because they were busy overbidding. And you know what they do too, Chris? We forgot to talk about this. They also want you to remove contingencies.
Oh, for sure.
I don't like I don't never advise my clients to remove all contingencies so you can get into a house. I never risk your money like that. You know, if you want to, that's fine. I may do an extra waiver for that, but I never have any of my clients waive all contingencies just to get into a house, because if something happens in the inspection reports or anything, if the appraisal comes in lower, then you have a chance of losing your deposit and stuff. And that's another thing, Chris. I know I said that was the last question, but if an appraisal comes in lower, what happens? Can what does a buyer supposed to do? Let them know. If the appraisal does not come in at the price that they bid on the house.
Yeah, so there's a couple of things. Obviously, there's the opportunity that maybe the buyer's agent and the listing agent can have a conversation, um, and amend the contract to down to the appraisal amount for sure. That happens sometimes. Um, Other times, if you're putting down 10% or more, um, the lender, if the lender's good enough to understand it, can adjust can adjust the LTV. It's essentially adjust the LTV to now all of a sudden take the excess money, because we have to have a minimum. Every program's got a minimum down payment. So if you're putting down a little bit more and it comes in, we can play with the LTV and get that right and get it in line, even with that subpar appraisal. If you're putting down minimum, if you're putting down the minimum and you don't have the cash to make up the appraisal gap and the seller won't budge, that's going to be an issue. If it's the minimum down payment and it didn't appraise, and the seller won't budge, that's where it really becomes an issue. But most of the time, we can try to find a solution. We can always also fight the appraisal. If the buyer's agent's like, nope, let me see the appraisal, and we don't think that the appraiser used the right comps in the market, or maybe it's really just that the appraiser didn't use the right comps in the market. If we can show some value into why they missed the value of the home, we show some evidence to the value of that, then sometimes we can go back to the appraiser and see if we can get the appraisal amended. That's a little bit more difficult, but it is an option.
And a good listing agent, they actually meet the appraiser or supply to the appraiser the comps and any upgrades that was done in the house also, just to kind of let you guys know that. So the moral of the story is, this is really, the market is really kind of slow right now. Homes are staying on the market a little bit longer. So guess what? That's a little bit, you most likely going to be able to negotiate that price or negotiate seller credits and stuff, whichever one is more important to you, or, you need and stuff. But right now is a good time, even with the rates, like they are right now. If you can't afford it and you can, sit back and, wait. And when the rates do drop and you have that equity, you could get lower monthly payments and stuff. So that's what, me and Chris is saying. So Chris, are you still on the bus stops in your Superman?
No, I still use that profile picture. But I'm no longer on the bus stops anymore. I used that. Honestly, it was a strategy I had for about 3 years. During COVID, it was fun for me because most people were just out driving, like no one was going anywhere, nothing was open. And it actually kind of worked. I mean, I still have people today that walk by me and go, "Hey, what's up, Superman? How you doing?" And they still think I'm out there on the bus benches, but I'm not.
Yeah, that's how I found you. I think
That's how
I'm
you
on
found me?
Fulton. I think you're on Fulton or something. Yes.
Yeah, I had a couple on Fulton. You never know. I might go back to it. You never know.
Yes, most definitely. All right, you guys. So Chris, why don't you shout out how people can get in contact with you?
Oh, you can. Well, let me do this. Thank you for that. I'll just pop that up here real quick. And you can call me, text me. Let me make sure.
Tawana, if I could find the 300 and under, me, sis, I'm going to find it. If it's there, I'll try to find it for you. And if it passes okay, this is another thing. I know it's about to leave, but sometimes you guys want to see any house. and you guys got a loan, if you have an FHA loan or regular conventional, it has to pass the appraisal. If the appraisal calls out bad AC, bad something, any health and safety, and the seller's not going to fix it, you guys just wasted money on an appraisal. Okay, so so it depends on your loan, you guys. So if you, like I said, if you have an FHA, a regular loan and stuff like that, you have, it's all about the appraisal. And I'm just going to tell you something about me. When I go out with you guys, hey Tina, when I go out and show you guys homes, I'm trying to stand back as far as I can to look at the roof to see if there's anything. I'm looking for cracks. While you guys are out looking ooh ah in the house, I'm looking for all the bad things. I'm just gonna say that. I'm looking for big cracks. If I see cracks in a driveway, I'm seeing if there's a tree. I'm looking at the AC. I'm looking, you know, all the things that I don't want you wasting money on a home inspection. Okay. If there's a lot of things wrong, because believe it or not, sometimes agents don't put the right things in. They put FHA and then we get to the house and there's no way the house can go FHA. All right. So, you know, but it's up to the professionals that you guys are using to look, to have your back and to save you money. I just want to say that. All right, Chris, go ahead.
No, there's my Superman picture. If you guys can see it, that's pretty funny. But yeah, if you want to be able to get a hold of me, Chris Lee, I'm easy to find. That's my cell phone number, 916-502-1536. You're right here on Facebook right now. I'm really easy to find on Facebook. You can DM me or email me. I'm happy to answer any questions. I'm happy to run scenarios for you. I'm happy to go over more things we have. We have a lot of one last cool thing for, especially for your realtors out there, is we co-brand very well. Once you close, we have a lot of stuff you can use to co-brand. But beyond that, once you close the deal with us, the mortgage statement, birthday cards, home anniversary cards, all that stuff goes out for free for you. You don't even know what's happening back to the client with my picture and your picture on there, and just reminding them who got them into the home, keeping you top of mind when they might be thinking about selling or whatnot. And the anniversary card shows up with Alita's pictures on it. They're like, oh, I got to call Alita. I want to get this thing done. So we try to do a lot of things for our referral partners to make sure that we help you grow your business as well.
Yeah. So if you guys are looking to, if you guys are looking, or if you realtors have clients that own homes already, but they're looking to downsize or, you know, or upgrade, or upsize or whatever, you could buy before you sell, right? And if you're a buyer and once the market starts going, you know, kind of crazy again and competitive, you can see if you qualify to be represented as a cash buyer. He's got the VA, he's got the down payment assistance programs. Chris got what you need, Chris got, right?
Very true. We pretty much have it all. We can broker out too. A lot of people think just because we're retail, you know, we could broker out, we could do DSCR programs, and for investment people, we can do it all.
That's right. So, all right. Anything else before I let you go?
I'm good. I appreciate you having me on. Thank you so much, Alita. You've been rocking it out. I've been seeing your Facebook stuff. I love seeing all your motivational stuff and the posts in the morning. So I really appreciate you.
Oh, thank you. Yeah. So, yeah, I had to start off my day positive to get through the day. So, all right, you guys. Realtors, Chris Lee, hit him up. I don't mind. I'll share him. Okay. Rachel Poole. I don't know if you ever got with Chris, but she's the one that got me into real estate, actually, Rachel.
Oh, really?
Yeah, I met
That's
her
awesome.
and then she's like, you ever thought about real estate? So she's the reason why I'm in real estate. I always give her props. But and if you guys realtors, I think Tina's in a different state, but I think she's a realtor too. But you can work in all 50 states. Did I hear you
All
say?
50 states. I have a loan going in Colorado and Missouri and Louisiana right now. All 50 states.
Okay. The only thing I say, just remember the time difference. Right.
For sure.
So, all right, Chris, I appreciate you, and I'll see you on the impact call tomorrow.
For sure. Thank
All
you.
right. See you later. Thank you again.